What's up? Good morning, everybody. Welcome aboard to Trading with Bubba for Thursday, the 18th of January, 2024. And not much going on. It's, more of the same crapola, as they say. Not much action. Suddenly, for a couple of days, it looked like we were going to get some business. And now suddenly we're back in the doldrums as we have pretty much of a mixed market. As we take a peek, you've got, let's start with the futures. You've got the S&P is a little bit higher in the middle of consolidation. You've got the NASDAQ up towards the top end, but a little bit higher, but again, in consolidation. You've got the Dow breaking to the downside. Okay, a little bit oversold, but breaking to the downside. And of course, you've got the Russell breaking to the downside as well. So you've got everything. You've got the NASDAQ, the Russell and the Dow are breaking out to the downside. You've got the other two in consolidation. From a trading standpoint, I'm working orders right now to sell the QQQ, zero DTEs in the QQQ. I'm looking to sell call spreads right now. I'm looking to sell the 412, 413. Okay, I think that looks like the right play in here, and I think that if we can get a little bit more rally in the spiders, I would look to be a seller of those as well. But I'd like to see it get up to about 475. In the meantime, as we look at some of our usual stuff, you've got Apple. Oh, gee, it bounced right off of 180, and here it's right close to 190. So as it approaches 190, we'd be looking to sell some call spreads here. Okay, we're still in consolidation. We're just churning between 180 and 190. Amazon came right to the bottom, as we said the other day. Look to sell some put spreads. Well, now you're in the middle of nowhere. There's really nothing to do. You're just kind of in a consolidation range. Again, light buy and light action. Very tough to trade. Very tough to want to get overly involved in. And the coin. Okay, coin is down towards the bottom. It looks like it's making a bottom here. I would look to be a seller of some put spreads here. Okay, again, I would be doing a lot of this either for the zero DTE or doing them for tomorrow. Okay, I'm not looking to extend out. I'm looking to play the market that we have right now. I'm not looking for anything extra than that. Again, I think that you want to look at the probabilities and see what you got here. But it looks like the markets are just kind of wishy-washy, screwing around right here. So that would be kind of what I'd be looking for here. Meta, amazing. Continues to charge higher. Here we are up against resistance again, oversold. So what are we going to do in an oversold condition? We're going to go ahead and sell some call spreads. Overbought. My apologies. Overbought conditions, we're going to sell some put spreads. Call spreads. Again, I'm losing my mind. Again, you remember, we're playing the range. We're at the upper end. We're overbought. So all of those things suggest, can it go higher? Of course. There's no guarantee that it's not going, but basically the assumption that you're making here is you're in an overbought market that should have some mean reversion. Okay, but we don't want to take any real big risk. We're certainly not going to fade what the trend is. The trend is certainly higher. All we're looking for now is a pause or a pullback. Okay, and again, the pause or the pullback, we make money 2 out of 3 ways that this thing's going to move. Either sideways we make money. If it goes down, we make money. If it goes up, we still don't lose money until it goes past where we're selling it at. So again, remember, we're just right now. We're not trying to jump aboard anything because there's not, with the lack of activity here, there's not a lot to jump aboard on. Google, a little bit of a bounce, getting towards that level. If it gets up around 145, I'd like to be a seller there. That would be something more that I would be looking for. Okay. IWM, India Whiskey Michael. Here I'd look to be selling some put spreads. We're oversold. We're down towards the bottom. We're at support. So again, those are the things that we've gone over, time and time and time. Again, is it 100%? No. It is a model right now. What we're playing here is we're playing the probability of the market and the probability of the near-term move. And because we can pinpoint the expiration, okay, and it's so close, so we're not worried about time, it makes a lot of sense to take some of these trades. Microsoft breaking out a little bit overbought, okay. And you go. Now, again, we've been overbought for 6 days here. How long can a market stay overbought? Well, as long as it wants. There is no limit. Okay. Remember, but you are playing the overall pattern. So if this looks to find, probably like the 395 area, that's where I'd be looking to sell some call spreads. Okay. NVIDIA, look at this. It broke yesterday, came right down to a support level and popping once again. Now, personally, as you know, I've been selling some call spreads in here deep in the money, and of course, they're not working out very well. So again, just because it's overbought, just because it's going too parabolically higher, doesn't mean it's not going to continue. I think one thing we have to remember as traders all the time is that just because I see it a certain way doesn't make it right for that time. It'll be right over time. The probabilities are correct, but again, the trade is not working right now. So either I look for another spot to redo it again, or I say, you know what, I'm going to pass for a while, okay, and move on to another product. The Qs, here we are. We looked at this a few minutes ago. Right up at the upper end, look to sell some 0 DTEs, okay? And again, I am working to sell the 312, 313 right now. Square dance here, Quebec. Here, we're down along the support level. So oversold, down on support at the end of a consolidation run. What's the most likely probability? The most likely probability is it will sit here or it might rally a little bit. Okay. Now, again, it could break. It could continue to go lower and I would lose money. Right? Again, I don't worry about one trade because to me, I don't care what the symbol is up in the corner. I just care about the chart reaction. I could care less about what the name is. And the SPY's right in the middle, right? So there's really not much to do here. We need a little bit more of a rally to want to sell. Tesla, as we said the other day, as it comes down, look to be a seller of some put spreads. And again, you're getting the advantage today. You've got 0 DTEs in the Qs and in the spiders, and you've got 1 day expirations for the rest. So again, if they're going to work, great. When hovering along support in a consolidating range, again, I would look to be a seller of some put spreads here as well. And these are the things that we're watching constantly as we look at the futures market right now, see if there's any trade or any action going on. There really is not much to do here either right now. This is what you're watching. Okay. The lack of overall activity in this market is showing us that there's not a lot really to get involved with. Anytime the markets chop back and forth is a thing that you want to remember that does not give you great opportunities. But what we watch, I would watch as we traded live this morning. We tried to trade the Philadelphia Fed, and there was no movement. It was a worthless waste of time. And I'm thinking that other than selling some premium right now, these markets are pretty much a waste just because there's nothing to do. And I think if you learn to remember that when there is nothing to do, there's not a direct reason for you to be involved in these markets. I think the important thing to always remember, okay, is are you getting an edge on the market? Is the market giving you some sort of an opportunity, some sort of an edge that allows you the opportunity to make some money? And if the answer is no, then you're probably better off not trading that market. And I think this is a mistake that too many traders make. They think, oh, well, the market's open, I have to trade. And that's actually a fallacy, because just because the market's open doesn't mean that you have to be involved in it. I think that you find that in markets, you're trying to gather and garner an edge on every trade you make. If you cannot find an edge, then you're probably not trading. You shouldn't be trading it. If you heard the story, if you're playing a poker game, if you can't spot the sucker in 30 minutes, then you're the sucker. Well, if you can't spot a trade that has an edge, what I assure you you're going to do is you're going to continue to look for one, and you're going to see a mirage of an edge that really does not exist. Okay. And I think that this is far too common in the world of trading, that people are sitting there looking at it, and they believe that they're sitting there looking at it, that they have to participate in it. And I think that becomes the bigger mistake that you can make, is when you start to participate in these markets that aren't giving you much movement. Now, as we go back and see what's going on in our futures. Now we're getting a little bit of a rally, a little bit of continuation. Will it create a trade? Okay. And what I would need to see, okay, I would need to see volume, for example, in the NASDAQ futures up to here. Okay. If we can get volume to spike to there, and it probably isn't going to get there, but it's something that I'm watching. Okay. But I'm not going to be watching much longer, because to me, it is 11:10 Eastern time. If we hadn't had any action yet, why would I expect that to change? And I don't. So I know that if I sit here and stare at this, well, then I'm going to find something to trade. And they're really, to me, as I look at the picture, now I'm going to watch this, because we are close. There are some things that are potentially happening here. So we'll watch. Potentially crude might give us a sale. Okay. Potentially a sale in the NASDAQ, potentially a sale in, there's a few things that are actually right now, any trade I would be making based on these charts that we're watching right now, everything would be a sale. But this is a blow-off pattern where a long-term capital gain is 4 minutes. So, and remember, I'm not trading this with an opinion. I'm trading this based on this particular period of time. Is it what we would call blowing off, which means heavy volume, straight up or straight down price movement? We're getting the straight up price movement, bang, 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 but we're not getting any volume, which means that there is no emotion behind this market. There is no fear driving this market. It's just normal trade that is just making a move up a little bit, but it is not, you're not getting the fear-based trade or the FOMO-based trade from those who are trading it, which means that there's more buyers in this case. And if it would reverse, there would be more sellers there. Okay. So this market tells me right now that there's more buyers to come, because you're not seeing a panic buy. You're seeing just a market pushing higher. Now, again, at some point, there should be a pretty big volume stick. I mean, look, I didn't make this trade, so I don't want everybody to think that I'm saying that it's a great trade. This would have been, if I was watching this at this point, this was an opportunity right here to buy the S&P. Okay, now we wouldn't have bought it at that bottom. We would have bought it somewhere off the bottom. Okay, and it'd be a small winner. It's certainly not a big winner by any means. Okay, but again, this is what you're looking for at all times. Okay, and this type of trading. Okay, in the short term futures blow off trade, you're looking to catch reversals that are brought onto the market by fear or emotion. Okay, that is what we're always focusing on. Is if in this type of trade, is that there's fear or emotion there, who's ever afraid or whoever's using their emotion to trade is wrong. Okay, and they're overbuying or overselling into a short period of time, which gives us the idea and the thought that there's going to be pretty much of an immediate reversal, which works a very high percentage of the time. It's a very high probability trade that we make often. Okay, when they're available. Now, again, if they're not there, you're not going to force them. And it's something that everybody has to remember. You're not going to force these trades. So again, we're watching, and there's really nothing going on. It looks like maybe gold might be creating that type of trade. And see, again, I have 8 products up here. Do I care what the 8 products are? No, I do not care. I have no interest in what the 8 products are. I care about the 8 chart patterns I'm watching. Okay, and if I could get a clean view on more charts, I'd put more up. Okay, but I can't get a clean view. But the truth of the matter is that I don't really have to stare at anything. All I'm really watching right now is either the volume or the price, one or the other, because it doesn't matter. Because until one event occurs, I have no trade to make anyways. Now they have to occur together, but if I'm not getting either side, then it doesn't really matter. So once I see, for example, I see the euro currency started to occur, and then I look at the volume and go, well, there's no trade, so there's nothing for me to do. I look at gold. There's some price, but there's no volume, so it doesn't matter. Again, these things are what you're watching, and this is how you go about grinding out the edge. This is how the markets create those consolidation patterns where you sit there and you say, well, oh, this is an area where we should sell, okay, or an area where we should buy, or an area where we should do nothing, okay? And that, again, is something that I want you to always be aware of as a trader, is to remember what you're trying to do. You're playing the overall chart pattern. You're looking for the opportunity to take the edge on the market. That's all this is about, is you trying to find a place to take the opportunity that says you have a small edge to trade off of. Okay, because again, if you can have a 6 to 5 edge over time, that makes a lot of money. Okay, and as you get bigger, and you will have times that will be bigger, and you should get near somewhere between 66 to 70% on these types of trades. Okay, so again, it's something that you have to focus on and allow yourself to be free and trade without the opinion because of what you heard on the news, because of what the Philadelphia Fed was, because of what the jobs number was. All that stuff is bullshit. It doesn't mean anything. Okay. The only thing you care about is one thing. You care about what you see right here. Okay. You care about what you see, depending on your time frame, what you see right here. Okay. Am I going to get an opportunity here? It doesn't look like it, which is why, as I said, although it's only 8:16 in the morning here Pacific time, I will be on my way to the poker room where I can get an edge and play. And guess what? When I'm playing poker, I'm playing the same way. If I don't get what I'm looking for, I ain't playing. I'll sit there and keep throwing hands away. Again, this is a business of repetition. It is a business of having opportunity. It is a business of putting yourself in the highest position of probability. If you deviate from any of those things, money management, probability, or anything else, you're really just putting yourself in jeopardy. Win or lose on that trade, you're putting yourself in jeopardy that you have no reason to do so. And that is something that we always try to focus on, is to make sure that we have the highest probability of making money. So again, I'm just keeping an eye on here because it does look that there's an attempt here. And what it would really take, in my opinion right now, is catch somebody short, okay, who has to panic and who has to chase up this market right here. And that might be something that would create an opportunity, but it does not appear as if it's going to happen. And I think that's something that we always have to remember is, again, if I sit here all day, is the probability in my favor that there's going to be a trade created? And the answer is no. There is probably not an idea here that there's going to be a trade created. So why would I want to be here and put myself in danger, as I can see that although we're getting some straight up price movement, we're getting no volume to support that, which means to me that there's no panic, there's no action. So there's really no reason for me to sit here and be overly involved. And, again, I don't have much else to say because there's really just not much going on. So we'll see you back here on Tuesday with some more Trading with Bubba. In the meantime, have a great weekend, everybody. Have a great day, and we'll see you back here on Tuesday. This is Trading with Bubba. See you later, everybody.